Saurabh shared you something in the WhatsApp group? No, we are going to play one game. That's why I asked him to take some print out. Right away, so he will share this one. This interesting game we are going to play. We normally hear this term blockchain and all those things, but we don't know how exactly it works basically. We say that safe, transfer and all those things. But we don't have that much knowledge about exactly how it works. We are going to understand that working of blockchain with the help of blockchain game. Let me know once it is ready, Venkat, online, so that I can start. Yes, it is working. Okay. यहाँ से कुछ करना है. We can start. Okay. Good afternoon, everybody. Welcome back to the GAN course on next gen supply chains, harnessing IoT, digital twins, and AI driven simulation. So, this is the ninth day of our GAN course. In today's session, we are going to talk about blockchain technology for supply chain traceability. Yesterday, we discussed the IoT, Internet of Things, what are the types of Internet things, how does that Internet of thing works basically, and then what are some applications of Internet of Things in different parts of the supply chain management that we discussed. On another very fascinating and excellent technology of industry 4.0 or industry 5.0, you could say, that is a blockchain technology. You might have heard this word blockchain technology, or this name of that technology, blockchain. We are going to talk about in depth. So starting from the history, when who coined this blockchain term, and who was the first body or the first person who used this blockchain technology, what are the features of this blockchain technology, and why nowadays everybody is talking about we should use this blockchain technology for various applications, in not only in supply chain, but there are many applications of this blockchain technology in different sectors, in different industries. So I hope you will enjoy this today's session. So let's start the session now. Session objectives: at the end of this session, you will be able to understand the basic of blockchain and distributed ledger system. What is blockchain? Why do we call it as blockchain? What is the distributed ledger system? And then we are also going to talk about the role of blockchain in supply chain transparency and traceability. And then we are going to see the concept and functionality of smart contract in supply chain finance, because Blockchain is also used for the smart contracts in supply chain management, that we are going to discuss and evaluate the impact of blockchain on supply chain efficiency and risk management. How could we use this technology for improving the business operations? How could we manage the fraud, scams, or how could we deal with some unexpected events in your supply chain, that we are going to discuss. Our usual way of starting the session, just get to know about what do you know about this technology, and then we'll jump into the our main content. Go to menti.com, or you can scan the QR code. Did you know this menti.com earlier? Have you heard? Yeah, so there are many things you could do in this menti.com. I don't know whether you have got the full access here or not, but you can do so many polls, quizzes, many things you could do in this. This is really user friendly and very good tool. Okay, so let's move on to our first question. What comes to your mind when you hear blockchain? Blockchain, Bitcoin. I don't know whether you know Bitcoin, cryptocurrency. What do you hear? What comes to your mind when you hear blockchain? Decentralized network, transparency, Bitcoin, transparent payment. Yes. Base of cryptocurrency. Yeah. Sometimes people they think that blockchain is mainly used for the cryptocurrency, or cryptocurrency are based on the blockchain technology platform, but there are many applications in other area. It is not only in the finance area, but if you take any industry, there are many application of this blockchain technology. So yeah, so these are the some of the words you can say: data transparency, Bitcoin, cryptocurrency, decentralized network. But there are some additional characteristics of this blockchain as well. We are going to talk about those additional characteristics. What does basically this blockchain mean, and what are the different features? Which industry first made blockchain famous? Any idea? Healthcare, banking, finance, agriculture, or education? Any idea in which industry people have used this technology first? That's correct. Banking and finance initially, uh, you know, we use this blockchain technology to make the secure and transparent transaction payment. Which of these not a feature of blockchain? Transparency, centralized control, immutability, security. Transparency, centralized control, immutability, security. Good one. What do you think? Which one is correct? Then why we have got the 5 students? Immutability. Centralized control. It is a decentralized ledger. It's not the centralized one. Immutability, that is the important characteristics of your blockchain. Once you record the transaction, you cannot change the transaction. You cannot amend it. Unchangeable. That's why immutability is one of the important characteristics of that your blockchain. Which big company has implemented blockchain for tracking food supply chains? Any idea? In supply chain management, which company has used it initially? Amazon, Walmart, Netflix, Tesla? Walmart. Okay. Which big company has implemented blockchain for tracking food supply chains? So let's see the answer. Walmart. Yeah, Walmart, they have used the blockchain for tracking the food supply chains from farm to the your customer level. So your pre-existing knowledge on this topic? No knowledge, little bit. You have done some courses, or want broader knowledge? A little bit. You heard little bit about this technology. You want more information, additional details about this one? Taken a basic course. Good one. You might have taken on some online platform. There are some um, courses available on online platform to learn about the blockchain technology. Good one. So you have got a couple of students. Most of the students, they heard about this technology. They know little bit about it. So we are going to explore it. What is it exactly, and what are the applications of this technology? What do you want to learn? Any specific thing you want to explore today? Blockchain applications. How does it work? Because basics of blockchain, yeah, we are going to talk about all those basic stuff. Consensus in blockchain, yeah, that is another very interesting stuff in blockchain. Consensus, what are the rules? Implementation in supply chain, yeah, how to make blockchain, all about blockchain, its basics and its uses, application of BCAT in supply chain perspective. A basic understanding, yes. So yeah, basically we are going to start from the basic stuff. So what is blockchain? Why do you call it as a blockchain? And then we are going to talk about the advanced stuffs as well. What are the key terms in blockchain? And we are going to play a very interesting game as well, blockchain game. With the help of that game, you will understand how exactly it works. Any questions? If you have, then you can post here. Otherwise, we'll move back to our deck. So what is blockchain? Any idea? Decentralized network. Okay. Why do you use blockchain? What is the need of blockchain? Better transparency. Transparency is one thing. What else? Security. Control. Control or what? Yeah, you are saying no one can control it. Okay. Yeah, one person cannot control the whole networks. So all the peers, involved in that network, they are, authority, or they are responsible for managing that whole network. So that's the another important terminology in blockchain. So blockchain is a digital decentralized ledger. Do you know the ledger? Keeping the records of all your transaction. Then it is called digital. Why we call it as digital? Because we keep the digital record of your transactions. Okay, so if you keep the record paperwork of your transactions, how much invoice or how much orders you received, what is the supply available, shipment details, so that is a paperwork. Okay, so here blockchain is a digital, we keep the digital copies of your transactions, digital copies of your transaction. Digital decentralized ledger that records transaction in data blocks. Okay, so there are blocks, each block contains the information of your transaction. Information, when you say the transaction, it doesn't mean only the financial transaction. Transaction, suppose I am a supplier and you are the manufacturer. So I deliver the 100 products to you. I made the shipment. You agree that okay, 100 products are coming from one of the supplier, what time it started, all those details, what is the quality of that product. So whenever we do this kind of transaction in supply chain as well, when manufacturer is sending the products to distributors from retailers, from retailer to the customer, so those kind of transactions. Suppose if you want to do the payment, online payment, so that is also one kind of transaction. So when you see this transaction in data blocks, so don't think that financial transaction, you see transactions in supply chain perspective. So digital, it is clear, we keep the record in the digital form, that's why it is digital ledger, keeping the records. Decentralized, what is decentralized? Decentralized means, suppose take an example of bank. Suppose Venkat wants to transfer some money to the Chinmay. How does it happen? Basically, Venkat goes to his bank, or Venkat send the request to the bank, his bank. That bank, whatever that bank, it checks the the recipient records. It checks the Venkat's bank details, name, and all those things, and also checks the Chinmay's bank details, everything. Once it is matched, then they do the transaction. That's, so who is responsible here managing that transaction? Your bank, government body, they are managing this transaction. Okay, so in blockchain, basically decentralized ledger. Okay, thank you. So in blockchain, we don't have that one centralized body which look after all the transaction. Okay, so here whoever is making that transaction, so all the parties involved in that network, they are responsible to approve that transaction. Okay, suppose there are suppliers, manufacturer, retailers, customers, everybody is involved in your supply chain, and when some new transaction is adding into the your digital ledger, then it is not only the one person or the two people, supplier and manufacturer, they approve it. So that is again the consensus mechanism. So majority of the people, they need to approve that transaction, then only it gets added to the your blockchain. Otherwise, if suppose majority means suppose 51%, okay, so if out of 100%, if 50% people approve that transaction, then only it gets updated. If you have got 40% up approving that one, it doesn't work. That information will not get updated into your ledger. So that's the your decentralized. So everybody decentralized at different nodes, they are approving this transaction. So it is not the only the single body who is approving your transaction. So it is a chain of interconnected encrypted blocks. For these blocks are encrypted. Okay, so you cannot basically change the any information in those blocks, and again interconnected. Why we are saying interconnected? So your first block initially will come open. Okay, first block, it is we call it a Genesis block. So everybody is aware of that one block. When you make the another block means you are adding the additional transaction, second transaction or second details. Then this second block, it is made from the some information taken from the your first block. So all the blocks, they are interconnected. Okay, suppose you want to create the third, fourth block, it is related to the preceding block. So without, suppose if you don't have the information of the preceding block, you randomly make something, that blockchain will not work. So that's the interconnected. All the blocks are interconnected. They are encrypted blocks. So you cannot change there once you record those transactions. Blocks, what do you mean by blocks? Blocks are the containers of the data that define a piece of digital information consisting of transaction along with the timestamp and cryptographic function. So I am saying blockchain. The first word is block. What does it that block means? Block, it contains the digital information of whatever transaction you are doing. Suppose supplier is doing the shipment or manufacturer is doing the shipment to the distributor. So whatever who are the recipient, who are the sender, how much the products they are sending, what is the quality of that product, when they are doing the shipment, all that information you keep in a digital form in a block. So what normally that block consists of? The timestamp when that information is updated there, when you are sending those products, shipments. Then cryptographic function again to make sure that, so this transaction is safe. So that is another cryptographic function of the blocks. So that's your block. Then blockchain presents timestamped and immutable blocks. What is immutable blocks? Unchangeable. Okay. Timestamp. So when you do any transaction on, and then when you try to record that transaction into block, timestamp will be there, the heading of the block, what is the information you want to say. Then the immutable blocks means once you record that transaction, or that block is ready, after that you cannot come back, and then you cannot change anything. Once it is recorded, done. Nobody can change that record after that one. That's why it's called unchangeable network. Sometimes if you have got some your paperwork or traditional way, you go back, you make some changes. Suppose you are sending as a supplier, suppose I am sending the 100 products in traditional way. So many times what happens, I can go back, I can make some changes in that whatever the paper record. So those kind of frauds normally happen in the traditional your network. But here timestamp is there, all the recipient, who is the supplier, what you are saying, what is the quality of that product, everything will be there. So we cannot change those blocks that are not owned by any single entity. So in case of your normal traditional transactions, all those transactions are owned by your banks or the centralized body. They look after who is paying, who is getting the money, how much they are paying, all those things. But here everybody involved in that network, they keep the record of the transaction that are not owned by a single entity, but rather managed by a group of nodes or computers. So who are involved in that blockchain, like group of node, the entity in your supply chain or computers, they have the copy of a copy of each digital transaction, each blockchain, where each block is secured and linked using the cryptographic principles. Again, as I said, these are the cryptographic the functions to secure that blocks, and they are secured and they are interconnected. Once the data is recorded, and after some time you cannot go back and you cannot make any changes, it is done. Okay. But again, consensus mechanism is there in order to approve that block, in order to approve that transaction. So the immutable, unchangeable nature of the block, decentralized nature of, so these are the some of the characteristics of your blockchain. Unchangeable, then decentralized. In normal way, in normal transaction, we have got the centralized body, but here decentralized body are there. What are the some of the benefits of decentralized nature, guys? Tell me. Have you seen that sometimes when you go for the online banking, or when you do some railway booking, you see server is down, or something happened, that's why you are not able to do that transaction there. Why is it happening? Because of the limited servers available to manage the whole that the transactions, or the happening in that bank, or happening into the railway reservation booking. But instead of that, if you have the decentralized nature of your transaction, each that decentralized node, they manage their transaction locally. You don't need to rely heavily on that centralized network. Okay. So that is the benefit of your decentralized nature of blockchain. Has redefined trust, ownership, identity, and financial systems. So basically, suppose whoever is doing that transaction, if they are getting the exact information, all the information what's happening in the supply chain, it means that the trust will be built in the in the everybody's mind. Ownership, everybody is owner of that transaction. Suppose supplier and manufacturer is doing some corruption, or they are doing some wrong things, other members, they have the authority to approve that transaction. Okay. If supplier and manufacturer, they are doing some corruption, or they are doing some the not good practices while doing the business, so all the members who are involved in that, they have the power whether that transaction you want to approve or not. If you think that something is not right, you reject that transaction, and the decision normally taken based on the majority level. So there are various consensus algorithm as well there. Identity, trust, ownership, and identity. So that's another very interesting stuff of identity. It is safe, we don't know who is doing. Anonymous, basically the information about the transaction. Financial system, by providing a secure, you cannot face any problems. They are fast, like here as I said, if you go with the centralized one, sometimes your server is down, something happen, so that's not a fast process. Here fast, transparent. Why it is transparent? Everybody can see in that network what is happening, who is doing what information is going, how much product we are getting, when we will get those product. Transparent. And pseudonymous solution, again this pseudonymous solutions means we don't know exactly all the members in the we know them, the pseudonames, but we don't know exactly their real identity. So each block is linked to its predecessor. Okay, so what I am saying that, so first block, everybody is aware of that first block. Okay, because when you want to create the blockchain, first block is the, we call it a genesis block, so everybody knows that block. But after that, then when you create the second block, so there is some mechanism available to link that second block with your previous block. Okay, so when you link that second block with the previous block, suppose you make 4-5 blocks, and after 4-5 blocks, if you want to make some changes there, so you cannot simply make that change without considering the previous block. If you want to make some changes, it is really difficult. Why? Because it is they are all interlinked, and if you try to make any changes in any of the blank in any of the block, if you try to change some information, whole blockchain will be collapsed. So each block is linked to its predecessors using a cryptographic pointer. The chain continues back to its first block. First block is the genesis block. Everybody is aware of that block. So what are the key characteristics of blockchain? Decentralized. No single authority controls it. So in your traditional network or in traditional form, the banks, the governments, they control the your whole transactions. But here, no single authority controls it. Who controls it then? Everybody involved in that network, they controls that blockchain, and they have the power whether they want to approve that transaction or they want to reject that transaction. Secure, again cryptographic encryption ensures the data safely. Because of this cryptographic encryptions, it is very hard to make some kind of attack on that block and try to find out some information. Immutable, once recorded, data cannot be changed. This is the another very interesting stuff. Suppose your business is involved, again going back and make some changes, so that is not, you cannot use the blockchain in those cases. Blockchain, so that it is non changeable once it is done. Because sometimes what happens in supply chain, when people they initially do the transaction, they do the honestly, but after some time they go back and they make the changes in the previous records. So in order to avoid that, this is a non changeable. You are saying true things on my face, and after that you are making some changes in our transaction. That is not going to happen in this blockchain. Okay, so once you record the transaction, you are saying that I am giving you the 100 products, and manufacturer is saying that yeah, we are getting the 100 products, that's it. After that, nobody can change that the record, transaction record. Transparent, all participants can verify transaction. So once new information is added, now what is the next step? New information is added into that network. Then in order to add that block into your blockchain, majority of the participants in that network, it could be the nodes or the computers who is doing who is looking after that blocks, they need to approve that transaction. And there are many mechanisms available: proof of work, proof of stake, all those things. So in proof of work, basically it depends on the majority, how many participants computers are involved in that network, and they take the majority call. If majority of the people agree that transaction, that transaction is added into the network. If majority of the people reject it, that transactions won't be added into your blockchain. So that's the your transparent, all participants can verify transaction. So some of the key events in blockchain technology. What is the historical background? When it was started and who it was started, what was the reason behind making this technology. So you can see here. So initially in 1991, Stott Haber and Stormatis described the blockchain technology. In 1991, during 1990s time, they wanted to make some technology timestamp so that they can record the timestamp, the information onto that technology, onto that tool. So they started initial work on that blockchain technology in 1990s time. But first white paper of Bitcoin and blockchain introduced with the blockchain conceptualization by Satoshi Nakamoto. Again, very interesting stuff, guys. If you look at this paper that appeared in 2008, they described the basic characteristics of blockchain, what is the use of this blockchain in financial system and other. So very interesting stuff. Okay, but if you look at the affiliation, you won't find the name of that author. Nobody knows that who published that one. The name of the author is Sudo, and the name of that affiliation is also Sudo. So currently as well, if you look at the Bitcoin blockchain, we don't know who owns it. Still, it is very popular, and people they are using for the transactions. But the initial the thing started with this Sudo names and Sudo paper based on the Bitcoin and blockchain by Satoshi Nakamoto. So we don't know who is that guy basically who introduced this one. Then in 2009, the first Bitcoin transaction, the Genesis block were mined. So mining is the process where you try to solve the complex equations in order to generate the new hash or new block in your supply chain. So we will talk about that Genesis block. Then in 2010, Bitcoin market, the first Bitcoin exchange is established, and the first public Bitcoin trade happened in 2010. Then in 2011, Bitcoin value reaches in comparison with the US dollar, euros and pounds. And then China Bitcoin exchange launched the first Bitcoin ATM is also launched during that 2011 time. 2012, Bitcoin magazine first issue published open coin release. So many developments happened after that when everybody was aware of this Bitcoin technology, and then it started trading on the share market as well. Like total Bitcoin value surpasses 1 billion USD in 2013. Zero coin concept presented in IEEE S&P. S&P is basically the index in the US. Thailand bans cryptocurrency. Still many countries they haven't given the official approval of this cryptocurrency. Okay, you can do the trading and all those things, but if you go with the normal share market, you have the government's approval, everything is transparent there. But cryptocurrency, still many governments they haven't approved it as an official currency or official thing for the share market. Ethereum is one kind of your blockchain or the coin, you can say. Launch announcement on Bitcoin forum. HMRC in the UK classifies Bitcoin as a private money. HMRC is the government body in the UK who looks after the basically the your share market and everything. So they define the Ethereum as a Bitcoin as a private money, and it should not be used for your regular transaction. So sometimes when these criminal gangs, when they do the cyber attacks or some malware attacks, they don't ask the money in your regular currency. They ask in the Bitcoin, blockchain and all, in some these kind of coins. Okay, to hide the what? To hide the identity. Who is that criminal gang? And it's huge amount of money again. R3 consortium formed in 2015. Coinbase opens up first US-based Bitcoin exchange. So this is Coinbase is a platform where you do the trading of this US the coins, blockchain technologies or other cryptocurrencies. Ethereum first live release. Frontier launched. Nasdaq initiates the blockchain trial as well. So Nasdaq is the another share market in the US. Linux then established the Hyperledger project. The DAO, decentralized autonomous organization, sets crowdfunding record. So at one side, people were trying to do this cryptocurrency trading and all those things on unofficial platforms, but other end currency, some companies they were trying to use this technology to improve their operations. So in 2017, Digital trade chain platform announced the US Department of the Treasury FinTech working group formed. Bitcoin sign added to Unicode. Japan recognizes the virtual currency. So Japan recognized as some countries they recognize it as a virtual currency. You can do the transactions, but some company they haven't approved it. Then Kodak announces Kodak coin cryptocurrency and blockchain. Then in 2019, Ethereum's constant tone pole hard fork is released. Facebook announces the Libra. So these are the some of the coins they introduced. Decentralized finance, and in 2022-23, central bank digital currencies. Several countries began experimenting with the central bank digital currencies to digitize their national currencies. So this is just little bit history about what happened, who has started this one, and some of the key events in this technology. Suppose now we will start to understand the basic difference between the blockchain and your normal transactions. So what is the traditional banking transaction? Suppose in traditional banking system, what happens? Suppose Venkat wants to transfer some money to say Chinmay. So Venkat requests the bank to transfer the money to Chinmay. This is the transaction he wanted to do. Then bank verifies the the Venkat's account balance, credentials, and then they also check the Chinmay's account and the other details. If verified, the bank approves and processes the transaction. If both things are approved, they approve the transaction and they do the the payment. So that's your traditional banking system. What are the issues in this one? Tell me, what are the issues in this traditional banking system? What is our main goal? Venkat wants to transfer the money to the. Why do you go with the bank? Why don't you directly go there and give him some 100 pounds, 100 rupees? Why you are going to the bank? What is the need of bank here? Yeah, okay, that is money in the bank. Suppose, but if you have cash, you go there and you give him 100 rupees. Transaction is done. What? Yes, accountability, trust. What else? Records. You want the records whether you officially given the money, because sometimes if Chinmay may say that I don't receive the money, okay, and then sometimes Venkat may say that he actually gave the 100 rupees, he may say that I give you 10,000 pounds, okay. So that's why we go to the bank look after this trust between the the basically the sender and the receivers. So third party involvement, bank is an intermediary here, okay, so who looks after that transaction, and that they it creates that trust between the two members. But when you use the banks, obviously you need to pay some transaction cost. So if you are doing the online banking, GPay, they charge you the their annual transaction fees and all those things. So high transaction cost sometimes based on the whatever the amount you are transferring. So these are the problems with your traditional banking system. Time delays. Suppose you want to transfer, but your GPay is not working, and there is an immediate need for Chinmay to get that money. You can't do anything there because of this the whatever the server problems or some other issues. Blockchain based transaction, what could happen in the blockchain when you use it? Blockchain based transaction, so basically you initiate the transaction online, Venkat. The transaction is added to a block and validated by the network miners and nodes. So you start that transaction, you want to you want to give the 100 rupees to the or 10,000 rupees to the Chinmay. You give all the details, this is my name, this is the person who is getting the money, timestamp that the transaction, and then this transaction is added to a block and validated by the network. Then who will validate it? Who is involved in that one? You are involved, and then the Chinmay is involved. You both approve that transaction, okay. Then miners, nodes means who are the basically the people involved in that transaction. Once verified, so both parties verified the transaction, then the amount is transferred to the Chinmay securely. So what are the advantage here? They are, you are not involving third party, transfer the money immediately, there is no time delays. Then what else? no third party involvement, lower cost and faster transaction. Because of the no involvement of third party, your transaction cost will go down, the transaction will be faster, immutable. Suppose that transaction is done, both parties approve the transaction, and after that Chinmay wanted to make some changes in the transaction. Chinmay, you actually gave 10,000 pounds, 10,000 rupees, and Chinmay wanted to make it 100 rupees. Can you go back and make the changes in that transaction? No, you cannot go back and make the changes into the your whatever the amount you have given to him. So that's unchangeable, cannot be altered. Blockchain removes the intermediaries. So when you add intermediaries, your whole system, whoever supply chain will become the complicated, unnecessary. The the different problems may come, making the transaction faster, cheaper, and more secure. Cheaper means when you remove the intermediaries, their cost will not come into that transaction. So cheaper is there, more secure is there. Why? Because both parties are basically approving those transactions. It's not like that only one party is approved. All the parties involved in that transaction, they are trying to approve that your transaction. So what are the motivations behind this blockchain? Problems with the centralized system, single point of failure. Suppose your bank server is crashed, okay, because of so many people are trying to log on to the your the bank's network, or again railway system. Suppose you are trying to book tatkal kind of thing, premium tatkal tickets, when many people at the same time they try to log on into your system, and because of this sudden demand, your the server may get failed there. So single point of failure. Centralized server, banks, railways depend on a few backup servers. They don't have huge amount of backups, they have few backup servers, and sometimes if those backup servers don't work, then their service will be affected. A failure in the main server can disrupt the entire system. Whole the system will be affected because of that main server failure. But in case of your blockchain, if one server is affected, one node is affected, only that the entity will be affected who are involved in that transaction. Other transactions, they happen regularly without any disruptions. System downtime risks. As I said, high traffic surges can overload central and backup servers. High traffic means during this premium tatkal or the normal tatkal, or sometimes during the one peak time, if high traffic is there, means huge number of customers are trying to access your banking the service, then it may your server may get become overload, and then backup servers will be affected as well. Leads to slowdowns, crashes, and service outages. That's why sometimes you see, please apologies on the the banking platform, or the in the on your railway platform, apologies, our server is down, so because of this high demand, our server is crashed, our service outage time during during the out of office hours. So that's those are the problems with the centralized system. Then lack of redundancy. What is this lack of redundancy? If the main server goes down, all operations stop, okay. But in case of your decentralized ledger blockchain, if one of the server is affected, but still other servers, they worked fine. No decentralized backup to keep the system running, okay. That's the another problem with the lack of redundancy. Redundancy means you are keeping that additional backup server, so that if main server is affected, you can run with the backup servers. But they again, they have got some backups, but only few servers, not huge amount of servers. So that's why that is the problem with your redundancy. Blockchain as a solution. So you could address these problems with the help of blockchain. How could you do that? Decentralization. Every node stores transaction acting as a backup. If suppose there are 5 nodes, 5 members are involved in supply chain, one of the node is affected because of some data breach or something, do you lose the whole information? No. Why? Because other 4 nodes, they have the copy of that transaction. In case of your centralized one, this is not the case. If main server is crashed, everything will be collapse. That's why. But in decentralized nature, decentralize your network, each member has the copy of that whatever the transaction you have done. So if one of the members are affected or few members are affected, other members have the copy, and then you can get the information from the other members. So that is a decentralization. Every node stores transaction acting as a backup. Distributed ledger, no reliance on a single server, reducing failure risk. We can say that we have got multiple servers, just for the understanding. In centralized we have got only one server, but here you are keeping the copy of the transaction at each node, at each component, so that distributed ledger is there. Immutability ensures data integrity and security. As I said, once your transaction is done, you cannot go back and then you cannot make any changes in that transaction. That is the nature of that blockchain. Faster settlements, you want faster settlements, that's why you go with the blockchain. Traditional banking transactions are slow sometimes because of the time delay. Blockchain significantly reduces the settlement time. Okay, it's not like that it is a Sunday, Saturday or something like that and you cannot do the online transaction. You can do anytime those kind of transaction. Security, cryptographic function and consensus protocols secure the transactions. Security means consensus means there are different kinds of consensus algorithms, and then if majority of the people they are aware of those transactions, they approve the transaction and the whole data is updated onto the blockchain. Immutability, data blocks cannot be tampered with, ensuring reliability. You cannot make a single change in that data block or the whatever the information you are stored, whatever the basically advanced technology use. Once it is done, it is tampered proof, you cannot make any changes there. So that's why in some cases, in some industries, suppose you have a need to go back and change some changes or make some changes in that one, in those cases the blockchain is not going to work. So you need some other database or other platform which allows you to go back and make some changes, whatever the changes you want to make, it is for just genuine reasons or for some other reasons. But blockchain doesn't allow to go back and make changes, so that's why it is unchangeable. Transparency, no third party intervention needed. You don't need to take the approval from any third party. Why? Because the parties involved in that business, they are making their approval, they know what is happening in that network, so you don't need any third party intervention. All stakeholders can verify transaction in a decentralized system. Everybody, it's not like that suppose supplier updated some information block onto the network and distributor doesn't get to know what is happening. Everybody involved in that network, they gets the update whenever the new information is updated or the new block is is added into the your blockchain. So what are the key terms of blockchain? Any idea? Have you heard anything? What are the key terms of blockchain? Ledger, okay. What else? Consensus protocol, proof of work, proof of time, proof of stake. So let's see some of the key terms that we use in the blockchain. First is the nonce and mining. Have you heard this term, nonce and mining? So nonce, a random number used in mining to generate valid hashes. I will tell you hash as well. What is the hash? So nonce is a random number, because when first block is generated, you get the previous hash, some part of the previous hash, okay, and then you make the second block. So when you make the second block, the consensus mechanism, proof of your work, you need to solve one complex equation there, complex equation with the help of your previous the hash available, and then you have some your own keys. So in blockchain you get your own private key and public key. Okay, so you use your private key, public key, whatever information available, you use the previous records of the hash, and then we use this nonce, a random number used to generate some valid hashes. So random number, we will see the application of this one in when we play that blockchain game. Mining. involves solving complex mathematical problems to verify the transaction. So there are various consensus algorithm, proof of work, proof of stake, and some other things. So in proof of work protocol, how do you approve the transaction? You need to solve the one complex mathematical equation, and in order to solve that complex mathematical equation, you need this random number. Okay, you need this random number. Once you get that random number, use the available information, whatever the key